Hello and welcome, and we're live with Dale Pinkert, and we're just kind of getting organized here. Let's see. Um, we were delayed for a sec. I apologize for that, folks. But we are here now after a week of turmoil, at least in the equities. Was it a week of turmoil in the Forex as well, Dale?
No, actually, it was quite a calm week. I was very surprised by the muted response of the dollar, which kind of gives me a little bit. I look for market messages. Normally, under normal conditions, you would have seen a risk-off move into the dollar, and that really didn't happen in a big way. The dollar was firm and up for the week, but definitely not explosive. Kind of like the bonds. During the sell-off, we had one day with a flight to quality, but I've never seen this type of volatility before last for more than one day. The last time we saw it was August 2015
Mm-hmm.
on the Chinese yuan devaluation, and the VIX seems a little stickier now. Although I think that the market's going to be able to generate a pretty good rally from here and maybe take the VIX back to 20 or a shade lower so that people feel comfortable. But to me, it was an earthquake, and you have to expect some type of aftershocks. But I'm looking for the potential of a rally back to 2750,
Mm.
and that would be a shorting opportunity for me with stops over the high. So actually caught it through the TZA, which is a bearish Russell ETF, 3 times bearish, and it had a nice 30-40% pop, and looking for a buy on it around 12 to 11 and a half if it happens with stops under the low.
So,
So yeah, I first of all I'd like to thank you for letting me invite myself to be on your show.
well, I had actually watched you before on Dave Modell a couple weeks ago. I saw you, so I was familiar with you already.
Okay.
I didn't know that you actually traded equity stuff as well as Forex, though. That's interesting.
Well, my philosophy uh, is that a chart is a chart is a chart,
Hmm.
and they're all traded the same, and the only difference is leverage and beta.
Hmm.
So people could say they specialize in one arena. I could trade anything, put a chart in front of me. I would use the RSI in formations and what I use in FX on anything. That's the beauty of technical analysis. You really don't have to limit yourself to one asset class or one instrument.
Well, it's a world that I don't know a whole lot about. That's why it's interesting to have you on here, just to kind of bring you into where a lot of my group of guys. I hang out with a group of guys on StockTwits, and we're basically we sort of specialize in the VIX and VIX leverage stuff. So this is really a devastating week for a lot of people that follow me, and um, it was pretty rough on me as well. But I mean, probably about a third of the people that I know out of our little group actually blew out last week. So it's
Yeah,
pretty devastating. And I know
I
that.
know what it feels. I know what it feels like, David. I've been there. I've
Mhm.
been on the wrong side. You know what? I think that everyone should continue to, you don't use hope to trade with, but hope is the oxygen in our life. It's also the carbon monoxide in our trading. But you go to read about any story, and most traders have had failures. Most, especially in leveraged vehicles, have blown an account. And really, you don't lose till you quit. And, people try and sell everyone the secret to trading, and if people are, see those kind of ads, I'd run away because there is no secret. The secret is hard work, persistence, and perseverance. And you don't know what you're made of until you face adversity.
Well, I mean that's definitely excellent wisdom because if you just were to like look at some random YouTube videos on our industry, you would think that everybody was making money and this was like some sort of gold rush or something. Whereas the reality is quite the opposite. It's a tough game and there's a lot of turnover, as I'm sure you know participating in a lot of this training and chat rooms and stuff. And uh, the key is for me. I find myself in this sort of educator spot now, and uh, the key is to try to help people learn risk management appropriately so that they can, the key is to survive another day and be in the game still. And
Exactly. You learn that from the floor. And some guys actually lost their seats from out trades, and they weren't even trades they thought they were in. But I put the VIX chart up for you guys. What's really interesting is that blue line that we got to. I had that speed line in since last year, and pretty amazing. It got back up there. One of the warning signs is when making money becomes too easy. And this is not the first strategy I've seen blow up where people are writers of an instrument and, for months and even years, they're just collecting premium. It's like picking up quarters off the sidewalk, but then there's that one move, that one cleansing move where, the boat is too lopsided on one side, and all those quarters you end up while you're bending over to pick up a quarter get rolled by a steam roller. And and that's what happened to people writing shorting VIX products and using those proceeds to be long stocks. So they were really leveraged for a continuation of the bull market. And these things happen. And I don't think it's over with the VIX here. Last time, if you see my chart over here, this is what I was talking about, was August of 2015, when the Chinese devalued the yuan. We opened 1,000 lower and in the Dow, but recovered that day, which is different action than what we're getting now, even though we put in a double bottom at the 200 moving. The characteristic of the candles are different. Still looks like a breakout to me. Now, if I'm right about a recovery in the market, we'll probably take it back down into this 20 range, which is usually normal. All of this was some subnormal. And, I did an interview. I thought this was going to happen a year ago. I did an interview with David, and I said that I learned that markets top with violence, which is what we're seeing in the S&Ps, right? And they bottom in silence. And there wasn't anything more silent than volatility except for this spike, a decade. So, yeah, and the longer the base, the longer the launch into space too. So I'm thinking that we get some candles. This is a weekly candle. The daily, one of the tells that the market would possibly recover was, even though we were testing the lows from Monday night or Tuesday, the VIX put in a lower high. So I'm thinking maybe something like A, B, C back into the 20 range. And then I actually think there's a possibility for higher numbers again.
Wow.
Like you, David, I interview a lot of guys, and one of the best I interview was saying we were going to have a 10-11% correction, and he was also a wild bull when we were at 2,000 in the S&Ps, looking for 2760. So that gives me pause just because he's so good.
Yeah.
But if I just focus on my work, I think that the VIX is going to pull back to 20, and that we get another run. And something we could talk about later, but I'm known for my RSI work and 3 drives. And when you have momentum confirming a move like this, 88 reading, normally a market doesn't top when the move of the market is confirmed by momentum. So I define this move in the VIX as a confirmed high, which tells me we could test it again.
Okay.
Similar, anyway, just one more example, and I'll let you get to a question. It's kind of like some of the ETFs last week where you had a confirmed high, and then we made a new high on Friday. For example, here's the TZA. So this was a confirmed high, right? So now we're still confirming it, but it didn't have the same momentum maybe the banks show. Yeah, these are all confirmed highs. So I'm looking for a break because markets normally do not peak when highs are being confirmed. They peak when highs are not confirming and divergence begins to develop. So sorry about the rambling, but
No, not at all. This is fascinating. This is
I have a
fascinating.
lot. I've been doing this for a long time.
So when you say confirmed with the RSI, you're indicating that the RSI stayed at the upper limit at that
Yeah,
time.
that it didn't make a lower high.
Okay.
So it's still confirming this move. And Mark, you might get a high with a confirmed momentum reading, but probabilities are it's not the high because the highs normally come in when you're getting new highs without confirmation of the RSI. And my best shorts are when the RSI is under 70. Readings like this are just, so much momentum built up that it's going to take some time for divergences to develop, in my opinion.
Well, I was sitting there this week. I spent a lot of time sitting there thinking about the period in 2000 when the markets. It was kind of like the internet bubble kind of burst sort of type thing, and I remember the markets just kind of grinding down. So like a lot of times it seems to me like when you're gonna have stuff bounce back, it'll be like very violent down and then up, kind of like a rubber band, you know, expanding and then boosting you back up. But some of the action I've seen lately has just been kind of grinding lower, and it doesn't feel like it's gonna. It didn't feel like it was gonna bounce. We had kind of a big sort of move up at like about 130 yesterday,
Yeah.
which felt really strong. I saw some stuff and then some other articles saying that that was caused by computers buying or something, but yeah, it could go on for a while. I know that for us, we're in backwardation right now as far as the VIX futures, and it has stayed in backwardation for like up to almost 200 days before. So it
So
could
that
go on
was
for a
another
while.
market tell. Yeah, that was another market tell. So while we were blowing off to the upside in the market, the VIX was not making new lows. In fact, it was beginning to advance. So
Yeah.
there was a message in that normally the market makes new highs. They take the VIX back under 10. We had a low of about 8.5, but while we were here, the VIX was kind of sticky at 11, 11.5, and wasn't making new lows. And one of my teammates here at Forex Analytics, I work with some pretty good traders, showed a chart during one of our sessions. Here's the team I work with, and I'm a big believer in surrounding yourself with traders better than you. I think you did that on the floor, David.
Yes.
So it was Stelios, and he brought out a chart that showed every time that the market was going up and the VIX began to rise with it, there was at least 5 to 10% correction, and that did manifest. So
Yeah, we saw that a lot in the last couple of weeks, especially like about 2 weeks ago. We saw SPX up, VIX up, and that definitely was a warning sign, like you said. I mean, and especially because of the fact of like you would see that sometimes when the VIX was like really bottom feeding in the middle of the summer or something, but this wasn't like VIX around 8.5, 9. This was already up around 11. That it was still firm and sort
right,
of building.
and that was with the market making new highs. It,
Right,
it just
right,
would not give up ground.
right.
So the markets, if you know where to look, and that's why you look at correlations like the VIX in the market, and you look at the dollar and energy, and correlations are great. They don't always work. Sometimes there's a disconnect, but they're great while they're working until they stop. But that was a pretty obvious one. I think I even talked about it in that video with David, that I had warning signs, and that's when we were here in the S&P. But I also talked about that my preferred short was a Russell. For your viewers, something that took me a while to learn is I use the analog of, say, American Idol. You know, you could have a great voice, but if you choose the wrong song, it's not going to work out for you because the song didn't fit you. And in our business, it's trade selection. Now, eventually, all of the indexes went down, but my preferred short was the Russell. So while the S&P was grinding, blowing off to the upside, IWM, I know you thought this was going to be a Forex.
No, this is great.
We
This is
could get
great.
to
Keep
support.
going. You're doing great. This is awesome.
Okay, so, you know, while that was happening, we were diverging, and the relative strength in the Russell was, you know, significantly weaker. So even though I bought the TZA early, probably right here, because this was our first break, and it rallied to new highs, the advance wasn't, you know, one third as strong as the Dow or S&P or Nasdaq. And as you can see, here's one of my favorite RSI setups: is that we were making new highs with the RSI under 70. So I was getting, like, here's your confirmed high, right? Like we were talking about earlier.
Okay.
We were confirming here.
Yep.
All right, and then we diverged. Okay, and right here, this is a non-confirmation. This is a confirmed high. This is a divergent high right here. So that was the top. So the point being that if you diagnose, it's best to be short the weak sister on strength, and best to be long the relative strength or leader on pullbacks. Because then if you're early, which is one of my tendencies, it's more forgiving. If I had done something like this in maybe a bearish NASDAQ, the quid or something like that, I would have taken much more heat, been down much more dramatically on my initial entry. But because I properly diagnosed the relative weakness, I was able to sustain myself even into new highs and being early. Where if I had chosen the S&P or Dow, I would have been pretty buried, even though eventually it would have worked out. So you know, it's not rocket science. Investors Business Daily, I'm sure you remember it, David. You know, used to talk about relative strength. They would rank stocks. You could do the same thing with everything, and you can tell by RSI structure. In FX, they have things like currency meters, but it's basically knowing which, what are your leaders, what are your laggards. You want to be short the laggards, you want to be long the leaders. So that's my story on the Russell, something I did talk about on a few interviews before it happened. In fact, I was lucky enough to be on TFNN, and some caller came in and asked me where I would short the S&P, and I said between 2870 and 2880.
Wow.
With stops over 29, looking for 2700 initially. So I underestimated this. Still is a great call.
Yeah.
But you know, I have a saying: don't expect perfection at the crab table. You know, if you get 2/3 of the move, you know, even half of the move, you're doing okay. And at least I wasn't long. So 2700 was my target.
So when we have a day like well, basically like all the days last week, when stuff is really kind of cruising around, what what is on your watch list screen? Like which stuff are you watching? Like for me, I'm watching like Nasdaq, E-minis, uh, VIX futures, some specific stocks. Do you is a big one the Russell for you to watch during the day?
Well, you know, I watch all the indices, but you know, our bailiwick at Forex Analytics is currency. So,
So
you know,
DXY.
the dollar, yeah, the dollar, and then the subdivisions of the Dixie. It's most heavily weighted in the euro. So I'm watching all the currencies. They give me messages. Certain currencies are commodity-related currencies, like the Aussie, and then you have the European currencies like the euro, and you have cable. And then you have things like USD CAD is pretty energy sensitive. That correlation is broken down. So I'm watching this, but what I find fascinating now is what has the media put the blame on for this market sell-off? David, I'm asking you a question. What, besides selling volatility, what are they pointing to as a culprit? And I'll give you a hint, it happened after the last NFP report.
I'm not sure.
All right, interest rates, right?
Oh, yeah.
So, yeah, so the bond market. And what's interesting to me on the bond market here, is this it? This is the bond. Let me find the bond. Here we go. Is that even with yields making new highs on Friday, this was your flight to quality in the treasuries. But when you look at it, we're almost at some objectives and starting to look at these lows here now, okay? This was a confirmed low right here. Then we had the bounce. This is a daily chart, and now the daily is not confirming. I go to different time frames. If we make another low here, the 4 hour will not confirm. The 1 hour will not confirm. My point being that we're pretty close to objectives on the bonds, and you know, if the bonds were so bad, I mean,
They'd be selling off more.
Yeah, so the culprit that they're pointing to looks like it's setting up a counter trend type of rally for me. And also, the market doesn't like a strong dollar that's deflationary. And, you know, basically for a year, 14 months, the dollar's been a tailwind for the market, right? Because the dollar peaked last year, and then after the election, we're down 10, 12, 14% here. So the dollar is also a headwind, but it wasn't much of a dollar move. And unless we get back above these old lows, this 91 area, there's still a possibility we could get one more shot down in the dollar. I also think that would provide relief for perhaps oil shares and the multinationals. Not as positive for the Russell because it's domestic. They don't do a lot of exporting. But that would also support the market not crashing from here if we could get the dollar to turn down. I think it could happen.
Talk for a second. Let's assume that you're talking to somebody who's very new to economics and the markets and this sort of thing. Talk just for a second about the relationship between interest rates and the economy and the Fed and that sort of thing.
Okay.
And where we are right now, because we've been in a very low interest rate environment for a very long time, and all of a sudden, you know, the Fed's shifted to, you know, to raising rates, you know, in the last year, and just try to explain to somebody who's new to the markets what those relationships are a little bit.
Okay. Well, actually, you know, rates bottomed in 2016. Let me get to a better chart, maybe the 10-year.
Because we have a lot of new people that haven't been really following this that closely, although it's kind of really important.
Yeah, but you know, there's something called disintermediation, David, where rates can go up and the market can ignore it for a long time. It did in 87, it did in 2000 and 2007. So really, when you think about it, we haven't made a new high in bonds since 2012. So basically, interest rates have bottomed out for 3 years. So now all of a sudden, the market's taking notice that rates are going up. So when the bonds go up, rates are going down. When the bonds go down, rates are going up. But really, this has been a long period of disintermediation where the market hasn't made a new low in rates, which was, I think, about 130 in the 10-year for 3-4 years now. So this has been a long-term developing top. But now that the whole world is worried about the bonds, I think there's something counter-trend setting up here. Because I think if I'm right, that for the dollar to come off, there'll be relief in rates, and maybe that also helps the market recover towards that 2750 level. I know a guy who thinks, this 10% is it, and we're on our way to 3,200 in the S&P. So, and I don't like to fade them. And, and that's something else. People that are new, they need to find a community.
Yes.
Okay. Okay. I'm a big believer in social trading. We have a free room, David, at Forex Analytics, and we cover more than currencies. But in a community, you only have two eyes. So, I could walk in. I have moderated, facilitated many live social trading communities, starting back at FX Street with LAR, I don't know, about 5 years ago, the live analysis room. And the fact that you have a community and you'll attract some good traders, they through screenshots are going to, show you what they're looking at. And you're going to learn a lot, especially if you're new, being part of a good community. It may seem overwhelming to you at first, but, you can learn, and you can learn from people who have stepped on the landmines already, which I'm sure, you talk about it, so that new people can avoid the mistakes that you or others you've seen trade have made. So get into a community is what I would advise your listeners.
Excellent point. And actually, I find that sometimes I'll go in these Discord chat rooms for different ones, even like penny stocks or something, and I actually learn something from the quote unquote not so great traders. It gives me a sense of what people are talking about. I was taught as a trader in the morning when you first start into the day, figure out what the theme is for the day. And it can be really easy to do that if you're in a group, because you see what people are talking about. You won't miss some news story, or you won't miss what the theme is sort of going forward. And if you're too isolated, you can miss that kind of stuff.
Yeah, you learn from everybody, David,
Yep.
from all different levels, even people that are fairly new, they might remind you of something that you're still working on after all these years, like being, you see them come out of a trade too early and you go, hey, you know what, that's my weakness too. I don't ride trades to objectives. So it's very important to have an open mind. When I was a young guy, when you and I talk about our days in Chicago on the floor, and I had a much larger ego before being humbled and having my teeth kicked in a few times, I would only want to know what people were thinking so I could fade them. I'd look for contrarian indicators, and it was so important that I was right and they were wrong. But, as I matured and my network grew in the market, and there were people whose work I respected, that, it's not that great to be independent. It's better to be in a cooperative, sharing environment with people whose work you respect, because, I talk about this a lot. And it's still, working with the team I work with, and I know their hit rate. And when I have an idea that it's contrary to what their work is saying, I might give pause to the trade and not do it. And, that's as important as a winning trade.
No.
It doesn't show up in your account, it would have, but it doesn't show up in your account. But avoiding a bad trade
is huge.
It's huge, because then you have to come back from it. So that's something else you get from, I say surround yourself by traders that are better than you. Let go of your ego. It's great. You're going to rise to the level of the people that you're surrounding yourself with.
Actually, since you brought that up, let
go of your ego. It's great.
Hold on. There we go. Since you brought that up, can you bring me back for a second to your beginnings? Because I know I've watched you tell it on other spots, but I have sort of a similar start to you, and just bring me back a little bit. How has your career gone?
A little bit.
Yeah.
Hold on, David. I'm opening the door to my time machine. So here I'm getting in it, and it's the summer of 1975, and I've just graduated from Northern Illinois University with a journalism degree. U.S. was in a recession, not a lot out there, just sales jobs for insurance companies. I didn't know what I was going to do. And a friend of mine invited me down to the CME. He was already working on the floor. He had relatives that were members. And I got on the L and got off the train. You know, in Chicago, you could take the trains, not like California where we have to drive everywhere. I got off and I'm in this building. I'm looking around for the floor. I'm asking people questions. They're looking at me strangely. And I go, "Where's the trading floor?" And they go, "You know what, son? You're at the merchandise mart, not the mercantile exchange." So, you know, that's where all the wholesalers had showrooms. So, anyway, I got back on the train, went to the Merc, up to the gallery, and Port Bellies was a very hot market back then in the mid 70s, and they went fast market, and I heard the roar and paper flying around and people running around, and I said, wow. You know, I grew up in Chicago. I'd never been to the exchange. I said, you know what? I want to find out what's going on here. So my buddy Gary got me signed on to the floor, and I just went around from operation desk of all the different brokers and said, really, I don't care what you pay me. I just want to learn. And started my career as a runner for Dean Witter. And at that time, you know, currency traders get a kick out of it. They just opened the international monetary market where they were trading currencies in gold, and they were actually trading currencies on a chalkboard.
Oh, wow.
So, yeah, so that's how long I've been around. So, anyway, those are my beginnings, and then I took a course in technical analysis at the Merc, and our Bible back then was Technical Analysis of Stock Trends by Edwards and McGee. I don't know how many editions they've had. Was taught by a guy who was a lumber trader and brought me upstairs to handle his book while he was scalping. And the rest is history. So, was yours similar?
Yeah, I was always into the stock market and that sort of stuff when I was younger, and I had a fraternity brother. I was in the Boston area. I have a fraternity brother who's his brother was a trader on at the OEX pit at the SIBO, and they were going to open an office in London, and I have a British passport, so they needed to hire local people for some sort of reason. So they offered me to come interview with them, and I didn't get the job, but I did get signed onto the floor. I went over to the OAX pit, and this guy was a broker there. His name was Hunt Hamill, and he said, "All right, I can get you a job. Just go to this guy's office. Tell him you've known me for 25 years, and he'll give you a job." So I went down to this guy's office on LaSalle. I walked in, and I said, "Yeah, I've known Hunt for 25 years," and he said, "You can get me a job." And the guy looked at me. He said, "How old are you?" I said, 21. And he said, "I can give you a job for 300 a week. It's not much, but it'll get you on the floor." And so, same sort of thing. I was a runner for Chicago Core. This was 1994. So, a little bit later, 20 years later.
Yeah.
But
you know what? A lot more money than runners made back in when I started. It was 75 a week. How about that? I had to live at home.
Yeah, I lived in a youth hostel.
Yeah, that's funny. Huh?
I lived in a youth hostel for the first while. I didn't know anybody, but same sort of thing. But the path for most people that are probably listening to us is a little different these days.
It's the internet with all the hype.
So what is it like working for a website and in these chat rooms? Is there a lot of turnover? Do you have certain people that you kind of like mentor all the way through from like beginnings to being successful traders, or what is it sort of like day to day for you?
I really enjoy it. It's a little different. Our community could ask questions, but they don't interact with each other. I've also done it the other way where, you know, it's wide open, wild, wild west, and they can interact with each other. But, you know, I have a great time, you know, bringing in guests like you do and talking about my views on the market and listening to the team and some of the traders on our team. Blake Morrow's very well known in the industry, and he's a great trader. Nicola Duke does harmonic work. Grega Horvat just won. I interviewed him on FX Street. He was an award-winning Elliotician. And Stelios does a lot of macro, used to trade for a bank, and Steve trades for a fund. He's one of the most disciplined traders I know. And there's me, and we have Amanda Sweeney. We also have a private chat because our free room goes for 90 minutes, an hour of analysis, half an hour interview. So after that closes, and even while it's going on, we have a private chat room for people to interact, share charts, support each other.
So you mean every day?
It.
That's what happens every day? There's like an hour?
Every day.
Okay.
Every day. I've been with them since last April.
And how'd you get to California?
Oh my gosh, I left when I was 23.
Okay.
Because in junior high, I remember saying to myself, watching the Rose Bowl with 5 inches of ice on the windows in Chicago, that why are we living here when I was looking at people with their shirts off in the Rose Bowl on New Year's. So I always knew I wanted to go to California from a fairly young age. I, told all my buddies I was going to go. And, of course, Jan and Dean, 2 girls for every guy. How can you pass that up? And when I was 23, with a few grand in my pocket and an old car, and I was working for a broker that had a commodity broker that had a branch in LA. I just arranged to have a desk when I got there.
Wow.
And took off when I was 23. I said, I wanted to have a seat, okay, but from where I was at, I didn't have the capital or the relatives to do it for me, like a lot of people. And so I said, well, if I'm going to trade off the floor, why not go to a nice climate and do it? So that's my California story.
That's awesome. My company that I came up with, Group 1 Trading, has they were based in San Francisco, so they would send all of us out to San Francisco for like 9 months as a training program. So I got to be a Californian for a year, which was awesome. I love it out there.
Yeah, it's it's the middle of winter and in the Midwest. I know what it's like, and in fact, my wife just got back from the Midwest, and it's you pay for the weather. I call it. People complain about state income taxes and the cost of living. I call it a weather tax.
Exactly.
You pay for good weather.
Exactly. Let me ask you a question, because I am admittedly very ignorant about technical analysis. Most of my trading has been to do with historical volatility graph analysis. I was a equity market maker for a long time. I obviously watch charts and look at them, but can you tell me just briefly, what are Elliott waves?
I'm an amateur, so that's outside my purvey. I'm dangerous enough to call myself an Elliotician, but for example, I'll give it an attempt. So we look at the crypto too. We cover crypto, and early in the week, I was talking about Ethereum, and we've had this big sell-off. Bitcoin's gone from 19,000 to 6. And, this was something else interesting that turned out to be a market tell. Crypto cratered before the market. The market started to decline with crypto, kind of this being analogous of over speculation, etc. And so I thought that the market was going to bottom this week, and I said if it happened, if the theory is true that crypto led the decline in indices, then it should lead the recovery. And I showed Ethereum here that this could just be an ABC. So in Elliott, the trend is 5 waves, and corrections are 3. There's all kinds of complex corrections, but again, there was divergence at the low here in Ethereum. We weren't confirming and called this bounce. So
So you're essentially
I'm
counting.
not an Elliotician. Yeah,
Okay.
I'm really known for things like a three drive formation, which is not original work. I learned it from J.R. Hill in the 70s, and using RSI to identify those three drive formations
Hmm.
and divergences for turning points, and also teaching people about when you have confirmed moves by momentum that you look for corrections to go with that, looking for another high to be made. Okay, so uh, in the case of Ethereum, maybe we're going to make a new high
Hmm.
because this was a confirmed high
Now,
at 80.
I I'm sort of in the minority, I guess, but I have an opinion on cryptos that I think that they've topped, they're going nowhere, and they're just going to slowly fade into oblivion. And I've been wrong the whole way up. You know, I was long Bitcoin at $1, and I lost my wallet. Uh, I had a lot of friends who were telling me to buy it when it was 3,000, but I'm still of the opinion that they're just going to grind lower. Do you trade cryptos at all?
No, I don't, but
Yeah,
I don't trade them. I watch them,
yeah,
and I'm mainly, you know, I watch things that I don't trade.
of course, yeah.
Like, for example, in currencies, I teach people about the importance of knowing direction of the euro pound pairing,
Hmm,
okay?
okay.
Because euro pound is, like I told you about your trade selection so important in the market that if you know the direction of euro pound, like you see it going down, when it's going down, the euro's your preferred short, not the pound, okay?
Okay.
And the pound's your preferred long. When it's going up, the euro's your preferred long and the pound's your preferred short. So as you see this week, the pound got hammered, and we're trying to break out over 89 and a half. I think eventually it will. In fact, I point towards this formation here. So let me just give you a quick primer on this.
Yes, please, because
This
I know
is
nothing about it.
okay. Here's drive one, David. Confirmed. Okay, and this makes me think that the pattern is incomplete. Here's drive two, and it did diverge, but not an ideal reading. Well, maybe it's right at 70. So I would like to see a third drive to complete up here, something like this. And I think that's when the dollar is going to bottom. So let me just draw a trend line here. Something like this.
It's hard, huh?
Yeah, I know. Anyway, so it's off these two tops. It'll end up here somewhere around 94. But that's my view, looking for three drives, and ideally, it will also have an RSI reading well under 70. So I combine a three drive look with RSI. This is a macro one. I mean, it's all the way, it's about 500 pips from here. I think this might be more about cable weakness than euro strength. But again, even if you don't trade euro pound, you want to know the direction of it for selecting your trades. Okay, do I want to be long the euro or do I want to be long cable? And euro pound tells you by the direction of this market which one's your preferred long and your preferred short. Again, you could be right about the direction of the dollar and be in the wrong currency. So you need to look at things that are going to help you with your trade selection by comparing what's a market message.
Which pairs are like sort of popular ones for people to start with as far as trading the forex markets? Is there a certain one?
Majors, the majors, dollar pairs, Euro USD, pound, Aussie, Canada, and then people start looking at crosses, and they start with crosses, and they'll go like Euro Yen. The guppy is a popular one. That's pound yen.
Hmm.
So, but that's a great question that you bring up. You don't have to be a portfolio trader. And you know what? You witness this. Everyone thinks, oh, I have to be diversified. I have to be in, 8, 10 different markets. How many guys did you know that never left one trading pit and were multimillionaires, never diversified, but knew that one market, that one option market, that one equity, that one commodity, that one currency, and knew it like the back of their hand. They didn't have to diversify. They just had to be a specialist. So I advise people, and I think I was on another interview. I heard it from I think ATN. He said a guy once told him, if you can't remember the last price of anything that you're trading, of everything that you're trading too many things.
Yeah, totally.
So, okay, so I think people should just select at the most three and become a master of a few instead, a jack of all trades, to use another pun.
Yeah, I 100% agree with that, and I tell that to people a lot of times. People find out I'm in finance and ask me about some part of finance I don't know about, and I explain to them that, like, all you need to be a successful trader is to find one little niche of the financial world that you can become an expert, the expert in, and a little edge somewhere in a small niche, and just focus on that. If you talk to billionaires, even, they'll say diversification is for preserving capital. If you want to make money, you need to focus, focus, focus on one thing. And I've really made that what I've done
That's
as
a
a
pearl.
trader. Yeah.
That's a pearl.
Yeah.
Yeah. We
Uh,
learn a lot. It's fun being a host and doing interviews. I know you're doing it for other people, but it's also edifying you at the same time, isn't it?
I really, it's been great for me because I've gotten to get a chance to talk to people like you that I wouldn't necessarily have access to if it wasn't for my following. And it's been great for me. All of a sudden I have a huge group of relationships with people that I never had before. And
You have your own community now, David.
yeah, and the people that,
Nice.
that I've interviewed, I've kept in touch with, and it's been it's a strange thing because you're sitting in your house in front of your computer talking to a screen and having a personal conversation with somebody, but yet at the same time you know that it's going to be broadcast somewhere, so you're kind of filtered a little bit in a way. But it's a strange thing.
Yes. One of the advantages of this business is not having to commute. When
Mm.
I was younger as a broker, Series 3 broker, God, I did commutes downtown Chicago. I would live in the Valley and drive to Beverly Hills. And now for me, it's, one room to another, and which bathrobe should I wear
That's awesome. Yeah. That's perfect. Yeah, and,
So,
and you can do it from anywhere. I mean, you could be anywhere in
yeah,
the world.
yeah, I've thought about it. Maybe an island would be nice. So I'm thinking about maybe one more adventure. So but that's the advantage. Take advantage of your freedom.
Yeah.
Definitely. That's one big edge. Is if you're not getting rich, think about your time. Because I always ask people, what's your most precious currency? And they'll say, well, it's not a currency, it's gold or the dollar, you know, king dollar, but our most precious currency is our time. Because money comes and goes, and time is gone forever. So that's our most precious currency, in my view.
Time seems to go by faster and faster the older you get, too. It seems like it just flies
I
by.
think Toffler wrote about it in the '80s. Future shock. We're living right in the middle of it right now, David.
Well,
I get information overload, don't you?
yeah, big time.
I was even telling my wife, when I was, maybe in high school, and you'd call someone's house, and they didn't even have an answering machine, and you would just say, "Huh, no one's home," and just go about your day and go, I'll just get a hold of them later. But now, if people call you and you don't get back to them, they go, "Oh, what's wrong? Maybe something happened," or "Oh, they don't want to talk to me." And how the world has changed is just what
Right.
I think was for our convenience has turned into slavery.
Yeah, I like to just turn off my phone and disappear at times.
I gave up.
It's hard.
You know what? I don't have a cell phone.
Oh, great.
I gave it up.
Awesome.
Yeah. So we have some questions from
Yeah,
viewers or
let's
audience.
let's take a look here. Crypto leads the markets. Uh, well, one was what I already just asked, which was basically like which Forex or bond products would you recommend starting with?
Okay. Again, I would. You may want to start with actually the Dixie, which has a lower beta than the euro
Okay.
itself. Market movement's a little lower. Also, if you're a starter, I'm not a big believer in demo accounts because people don't take them seriously and they go, oh, well, it's just a demo, it doesn't matter. So I think what a good compromise would be for people so they have a little skin in the game is if you want to trade currencies, they have micro lots. So like, 100-point move in the euro is $10.
Hmm.
So, you're not going to get rich that way, but it'll give you an understanding of what your emotions are going to be like when there's money on the line. If it's a demo or what you and I used to do, paper trade, you don't take it as seriously and you don't experience risk because there is no money on the line. So I recommend micro lots and do that for at least 6 months before you increase leverage. And I'm also a big believer, even when you're a pro, to use less leverage and let your trades breathe.
Hmm.
Otherwise, you're going to be right the market, wrong the trade, have your, what's my handle on Twitter, Forex Stop Hunter. So I'm looking for you.
Well, Forex is much more leveraged, it seems, than some of the equities as far as trading wise goes. Like it
But
seems
you don't have to use it.
right,
Yeah,
right.
it's your choice. You don't have to use it. And you could reduce it. You could have $100,000 account trade micros. It's almost like paying cash for the currency. And then you're looking for a 2-3% move in currency. You're still making money. The problem is people with 5-10 grand want to become millionaires and they leverage up 50 to 1 and they swing for the fences. And just like in baseball, the biggest home run kings were also the biggest strikeout kings. And this is a one mistake business. You can't strike out. So I'm a big believer in reduced leverage, even wrote a song about it, and not try and hit home run balls, but just get on base
That was
and
what.
grind it out. The best traders, David, they don't shoot for 500% returns. They do cartwheels doing 30-40% on their money every year.
Yeah, that's a great point. You see all
Even
this.
in leveraged instruments.
I mean, you see all these guys like with these like boot camps that say like, okay, I've got 10 traders and we're shooting for 250% between us this week, and we do that every week. And don't believe that stuff, folks, because it doesn't exist. Nobody makes 250% a week. If you were making 250% a week, do you think you would be on YouTube trying to sell a course to people? No, you'd be like in the Bahamas hanging out somewhere. So don't
Yeah, but you
believe
know
that.
what? There are people that um, are very good
Yeah. Oh,
that
definitely.
don't need the money. But I'm also a big believer in. I would tell your audience to have multiple revenue streams.
Mm.
And there are some good people that have services to have a different revenue stream and also like to teach people, kind of pay it forward what they've learned. And, I could take it back to look, you were in Chicago. You know Richard Dennis, right? Heard of the legend Richard Dennis who taught the turtles and they all became legend? Or you
Mm.
don't go that far back? You remember the turtles?
No.
Turtle traders? Okay, well, anyway, Richard Dennis was a legend. He turned 5,000 into a million. He said he could teach anyone how to trade and took a group of people, and they all became. Linda Ratchke was, I believe, a turtle.
Oh wow.
And he, although made millions in the market, he had bad years too. Also had a clearing firm, C&D Commodities. So, you could be wealthy and still be in the business of trying to teach people and generate another revenue stream. I don't think everyone who's ever made it just wants to be alone, isolated, on an island,
Right.
and not having contact with people. Here's something, a saying that I really have taken to heart. What good is anything until it is shared with another?
Totally. Totally. Yeah, it's funny when you mentioned about Richard Dennis. It's like I don't think people realize that the trading floors in Chicago, there's a huge sort of rivalry between the floors, and so SIBO doesn't really mix. At least when I was there with the Merc versus CBOT as far as commodities, like we were
Yeah,
not exposed to the same stuff you were, and vice versa. I think in a
right.
way, like it was very separated, sort of. And
Yeah, it was like the three great religions:
right,
SIBO, Board of Trade, and the Merc.
yeah, exactly. And my roommate was a clerk in the yen pit, and so he would tell me about the S&Ps going crazy in the 90s and stuff, and what was happening over there at the Merc, but it was always a little bit different. But yeah, I'm sure I missed
You
out.
let me ask you this, David. Do you have an R-rated audience where I could tell a joke about the yen?
Sure.
Okay. So this Japanese businessman, had to convert his yen to dollars, and he'd fly to New York, and he'd bring 10 million yen, and the banker would go, "Okay, I'll give you this amount U.S." And he'd go, "Why?" He goes, "Well, how come so little?" Well, the markets are volatile, and they fluctuate. And he did this a couple more times, and each time he got less. And finally, on the third time, he said, "Don't tell me, I'm fluctuated again." So anyway, that's my R joke on the end.
That's awesome. Oh, so what was I gonna say? Dave Modell just joined our chat. So hi, Dave Modell.
Yay! Hey, Dave, my
Um,
buddy.
yeah, I saw you. I saw you playing guitar on one of the things. That's awesome. I'm a jammer too. I consider myself a hacker actually,
Yeah, I'm a hack. I'm a hack.
but
I'm more of a karaoke guy.
oh, nice, nice. Yeah.
Yeah, so I used to do a lot of kind of Elvis stuff, and I use that as marketing. That's how I met my wife.
Oh, really? Wow.
Yeah,
That's
singing
interesting.
Purple Rain.
Oh, nice.
She couldn't help herself after that.
Is she there right now?
She's out. Yeah, she's here.
Nice.
She's not listening, but she's here.
Well,
Hi, David. So, what do you want? Where do you want to go from here, buddy?
I just want to give people who've lost some money, a bunch of money this week and stuff, a little bit of encouragement moving forward. Just from my own point of view, I've had winning and losing streaks. I was relating a story a while ago where uh, I was working for somebody as a clerk, and our name tags would not work in the turnstile because he'd lost all his money, and I ended up losing my job by finding out that my thing didn't work in the turnstile. We've all gone through
Wow.
rough times. I was out of the market
Yep.
for 10 years and went into a different industry. Uh, Basically was down and out, and but trading's always been in my blood, so I came back to into it. I brushed myself off. If you had a situation last week where you lost even all your money, you can get another job, save up a little bit, and retry again. I mean, some of the best traders in the world it's happened to. Jesse Livermore, for example.
Yeah, but don't do what he did.
Right.
And also, David, um, a lot of people go through. You don't know if you really have faith until you face adversity, and that's a great story. Trying to get into the exchange, and you couldn't, and you got out of it for 10 years, and you said it's in your blood. I've often said that, once you become a trader, it's like being in the mafia, because I've tried to walk away from it at times in my 30-year plus career, and still always had the market in the corner of my eye. I remember once even being an auto salesman in my 20s. Like being in the mafia. And I wasn't a good auto salesman because I'd get in to do a demo with someone and I'd be talking about the gold market with them. Okay, so it's Hotel California. You guys are hooked. Although, you know, if it's really a destructive factor in your life, I also want to say this. There is no law that you have to do this. Okay, you don't have to trade. For some people, they aren't suited. They never will be suited, and it's not for everybody. But if you have the desire and you're the type of personality that really can commit and live through and persevere, it could be quite rewarding. And, you know, the roller coaster goes both ways, and you're going to also have good times. And you'll be able to manage the the drawdowns better. In fact, there was a clearing firm on the Merck floor, David, called RB&H, and the owner of the firm, or it may have been Repco, was Charles Dittmer, and he didn't know what kind of trader he had until they went deficit in their account. Okay, and he let them trade on a deficit. He'd fund it, you know, make their margin calls and everything. But he said the best traders knew how to come back. Everyone's great when it's green. Okay, and when I used to manage money, I would look for drawdowns and what the people did after the drawdown. So, you know, it's like any other endeavor. You know, it's what happens when things aren't going your way. Do you fold, or do you have the tenacity to come back? So, but, you know, some people, it's just not for them. And, you know, it's a difficult life, and it's a stressful life. And it's, you know, I don't think anyone's life is going to be that much emptier if they're not a trader. Just my view. Just my view.
Yeah. So, and then just to sort of wrap.
Probably not used to hearing that. Probably not used to hearing that from other traders.
Well, that's why we're here, is to give people some honesty, because, like I said, there's so much garbage out there online of people trying to just sell people unrealistic fantasies. And this is like any other business in the sense, if you work hard and you focus in on it, then you can be successful. Which I just wanted to kind of go back just to sort of end this to your website, and how what would be the typical course of action for somebody as they come and join your website? Which sort of plan would you recommend to people to start with?
Well, if they're initially, they could just join the free room,
Okay.
which is right here on the website. Whoops, not there.
I've gotten as far as just signing up my name. I haven't gone in, but I am going to continue with it.
Okay.
And
So you see, you have a free webinar from 8 a.m. Eastern time.
Okay.
Okay, and it's an hour and a half. The first hour is analysis, and then there's all different pricing for different levels of service.
So you must get up really early then in California to be online at 8 o'clock New York time. What time do you get up in the morning?
3:30 a.m.
Oh my gosh.
My life is like a farmer, except that I nurture seeds of greed for the harvest of pips.
Oh my gosh.
And so here's, you know, some different pricing. It's very competitive, and, you know, most places, like you asked me about Elliotician, about Elliot, you know, you get all different kinds of analysis on every pair. You know, you could go here to the traffic light page. Don't run red lights, but you could go the euro, and this is a macro view of it, right? Then you could go, well, what's Elliott Wave look like here? And then you get Grega Horvat's work.
Oh wow.
He's looking for rallying. Then you could get harmonic work, you know, harmonic patterns, butterflies, and so forth. You get the basic technical. Blake and Steve do this. And you get candlestick analysis as well by Steve Volge. So you'd probably have to have a few different subscriptions to get all the coverage of different disciplines and methods that we have here. And we all collaborate in the free room too, and in the private chat. So they could go there, or they could just also follow me at Forex Stop Hunter on Twitter, and that's where you could find me in the free room and on Twitter.
I think
here's
I have a suspicion that some of the people who've been in volatility trading for a while and got really smacked around on these leverage volatility products are kind of looking for a different path in the trading world, and there are many paths in the trading world, and one of them is certainly Forex. And I would call it sort of a very pure form of trading, and it's all broken down on this on your website. I was watching this history of Egypt thing. It's this John Anthony West series, and they're talking about the harmonics of the pyramids and the structures way back when, and it was sort of the derivation of Fibonacci and harmonics was very interesting.
Yeah, the universe is math.
Yeah.
And I say to people, if you could add and subtract, multiply and divide, you could trade, because it's all math. All the different disciplines are about relationships that are, part of nature, part of the universe, and Fibonacci, natural numbers, cycles, everything is something that was here before we had the internet and we're trading VIX derivative products.
Right. Exactly. Really? Are you sure?
Yeah. Positive.
All right. Well. I think it was definitely some cosmic powers of the universe that brought us together here today, and it's very nice to meet you. And I hope we can stay in touch with each other as things go forward. I do want to learn more about Forex because it's not my specialty at all. And thank you very much for joining me today, Dale.
I enjoyed it. It's great talking to someone who had the Chicago experience like I did, and it's my mission to build up and edify traders every day. So I hope I accomplish that mission today with some of the things and thoughts that I've shared with your audience.
Well, you're a good guy, and if the rest of your website is people like you, I'm sure it's a great spot for people to check out. Thanks for sharing that stuff with me, and I will stay in touch.
Okay, good hunting, David.
All right, thank you very much.
All right, buddy. Have a great weekend.
You too. Good luck next week.
Thank you, buddy. You too.